If you own an LLC or have been thinking about starting one, you've probably heard about filing as an S Corp to save money on taxes. But what does that actually even mean? And more importantly, does it make sense for you to file as an S Corp for your business specifically, especially if you're a real estate investor? In this video, I'm breaking down exactly why so many business owners and real estate investors specifically elect the S Corp taxation. We'll talk about how it can save you thousands of dollars on your taxes and when it might not be the right move for you. By the end of this video, you will definitely know if switching to an S Corp taxation is going to be a good play for your business, or if it's better off for you to just stick to filing as a traditional LLC. Personally, in our business, we made the switch to be taxed as an S Corp probably about 3 to 4 years ago, and I wish we had done it sooner or as soon as we started the business, but it's all good because we're there now. So I'm giving you the game up front so you'll be able to make that decision this year before you file taxes for your business. All right, so first, what is an S Corp? A S Corp or subchapter S corporation is a tax designation. It is not a business structure, okay? So a sole proprietor, a LLC, or a corporation, those are business structures. A S Corp is a tax designation. That's important to know. It is not a business structure. So when you create your LLC, you have the option for it to be an LLC single member. You can make it a sole proprietorship. You can make it a partnership, but you cannot make it an S Corp. After you file and create your LLC, then that's when you go on to elect to be taxed as an S Corp. And what an S Corp does, and this is why it's so important, is it allows a business owner to take a salary and distributions, which ultimately reduces self-employment taxes because you don't have to take all of your income in the form of a salary. That brings us to topic number 2, which is why LLC owners, especially real estate investors, choose to be taxed as an S Corp. Now, LLCs by default are taxed as what they call pass-through entities. This means that all profits are subject to a self-employment tax, which I believe to be 15.3%. When you elect to be taxed as an S Corp, that means you're able to pay yourself a reasonable salary, and that salary, of course, will be subject to payroll taxes because it's a W-2 salary, but the rest of the business profits can be taken as distributions, and distributions are not subject to self-employment taxes. That is very key. This can save you thousands of dollars each year in taxes, and I'll give y'all a real life example, okay? In our business, me and my business partner take a salary of $36,000 each per year. What this breaks down to is $1,500 bi-weekly. This is what we pay ourselves using ADP, W-2, direct deposit, okay? So this is straight deposit income from the business that is subject to self-employment taxes, okay? Payroll taxes, all of those things. This is our salary. And we chose $36,000 a year because between myself, my business partner, and our CPA, that is the number that we agreed upon to be our reasonable salary, $36,000 a year each. In addition to that salary, every time we do a deal, let's say we close a deal for $100,000, me and my business partner are going to each get 20% of those profits, all right? So just to break it down for y'all in a real life example, let's say me and my business partner close a deal for $100,000, all right? Naturally, for our business breakdown, 40% of all income goes to the owners, okay? So that would be 40,000 of that 100,000 is going to go to the owners, me and my business partner. So we take 40,000, put that in the owner salary account. And we're only paying out $6,000 a month in W-2 salary, but the rest of that money is going to get divided between me and my business partner. So we're gonna put, out of that 40,000, we're gonna put 6,000 into our W-2 account that is gonna pay out the salary for the month, and that's gonna leave $34,000, right, in profit. So me and my business partner are going to split that 50-50, and that's going to be $17,000 each that we're able to take as a distribution. So we're still getting paid a decent amount of money, but we're only paying self-employment or payroll tax on that $36,000 a year. The rest is being taken solely as a distribution, meaning we're getting that money without tax coming out of it, with no fees coming out of it. We're getting a straight Zelle payment from our business bank account to our personal bank account for that remaining money as a distribution. And since those profits are not coming out as W-2 salary, getting that self-employment tax or those payroll taxes, we save that money every year on taxes. Meaning we get to physically see and feel a lot more of our cash. And that is going to take us to topic number 3, which is who should file as an S Corp. So for starters, if your net income is over $50,000 to $70,000 per year, an S Corp might be beneficial for you. Real estate investors who own an active business like fixing and flipping or wholesaling, an S Corp is going to be great for you because you see a lot of money in earned profits. These are going to be the people who benefit the most. Us as real estate investors benefit the most from electing an S Corp taxation structure. Now, rental property owners typically do not need to file as an S Corp. One, because when you have rental properties, you're typically not getting a very large sum of money repeatedly for those properties. You might have some cash flow, but it's not, 10, 20, 30 thousands of dollars each month when you get that payment. Secondly, rental income is already considered passive, so it's not even subject to self-employment tax anyway. But for us flippers and wholesalers, we can significantly reduce our tax burden by shifting our income from self-employment to self-distributions. Topic number 4, what are the S Corp tax benefits for real estate investors? So first things first, which I've mentioned several times, you avoid that self-employment tax when you're doing distributions. Secondly, you're going to get more favorable tax deductions on things like health insurance and retirement accounts. And as entrepreneurs being self-employed, health insurance can cost a lot of money, and we also don't have a company or a corporation creating our 401k, so we have to build our own retirement accounts, and we're going to see a lot of deductions and tax breaks for taking care of those things as entrepreneurs who are filing as an S Corp taxation. And we're also going to avoid double taxation, which you see sometimes with C corporations. Topic 5 is going to be drawbacks and when it's not a good idea to file as an S Corp. One of the drawbacks is it does require you to set up payroll, all right? So when you go through the process of setting up payroll, that can be kind of tedious. It could be a little time consuming depending on what company you use. Again, we use ADP. It's pretty simple. We talk to an ADP rep. They have the app, so I'm able to submit my payroll, update my payroll, change my payroll, push my payroll day back, all those type of things simply through the app without talking to anybody. So very customer and user friendly. And they only charge us like $40 a month for the service. But you must set that up because in order to comply with the S Corp, you have to pay yourself a reasonable salary. When you select as an S Corp, there also will be more paperwork and filings, okay? So you won't file as a traditional LLC and file a business tax. Now you will file a business tax, but ultimately it's going to be all pushed through to the owners, all right? And so your CPA can go more in depth about that, but it is going to be a couple more forms that you have to fill out when it comes to filing taxes. But do you want more forms or pay more in taxes? That, my friends, brings us to our last topic, which is topic number 6, how to file as an S Corp. You gotta know that. First step is simply starting an LLC, which I imagine if you're watching this video, you've already done that. Second, you can file a form 2553 with the IRS to select that S Corp taxation. Third, set up payroll and pay yourself a reasonable salary before you start taking those distributions. I would encourage you to work with a skilled CPA to overlook all of this and make sure you are making the right decision. All right, so there y'all have it, man. That is my video. Should you file as an S Corp? If you are a real estate investor that's flipping properties or wholesaling properties, I highly encourage you to elect the S Corp taxation structure because, again, it is going to save you thousands of dollars on your taxes. And these are the things that we have to pay attention to as we start to make more money and really build wealth for ourselves, right? Because being rich is one thing and being wealthy is another. The rich worry about getting money, but the wealthy worry about saving and keeping the money. And a lot of that money is going to come into play when it is tax time, my friends. If you make a lot of money, you're going to have to pay a lot of money in taxes. So it's all about how much can you keep and what do you need to do? What steps do you need to take in order to keep that money that that you have already worked so hard for. That's very important for us as entrepreneurs. Hopefully you learned something. If you are considering setting up an S Corp, or if you have questions about the S Corp tax election or anything related to LLCs and entrepreneurship in general, feel free to drop me a comment below, guys. I love to respond to the comments. I love to engage and interact with other entrepreneurs, and hopefully I was able to encourage and motivate somebody to go ahead and make that change, make a change in your business, make a difference in the money that you're spending on taxes, because it may just be a couple $1,000s to you if you're making a lot of money. But once you accumulate that, if you plan to be in business for year after year after year, those thousands going to continue to add up. And again, that's money that you could have put in your pocket. That's money you could have reinvested into your business, or that's money you could have splurged and spent on material things. Whatever it is that you like to do, it doesn't matter. It's your money. You need to be looking for every way that you possibly can to keep as much of it as possible as an entrepreneur, y'all. It's your boy Real Estate Show, and until next time, tap in.